basic consensus that we're not going to see any move on the BOJ. But when you're thinking about your portfolio construction, right, and you take an input like what we got out of the Nikkei and in terms of the documents they've seen today, so then you've got your risk-free, perhaps, for the next year or so. How does that change your idea when it comes to your own portfolio construction?
Sure, and thank you so much for having me on. We obviously do take a look at these issues. The Bank of Japan potentially normalizing its monetary policy will be a pivotal moment for the Japanese economy and to finally exit the last decades of deflation once and for all. That being said, we do think that this will be a gradual process where we move on adjusting on yield curve control and then to move from negative interest rate to zero and then to positive, but in a gradually phased manner. So, the company management that we're speaking to say that, if that is the case, then the yen will likely gradually appreciate, but they could live with that. And you've spoken earlier about companies borrowing from banks. This is also something that we're seeing by happening at a gradual pace. So we do think that this is going to be a very interesting environment going forward, but we don't think that it would be too volatile of a situation for companies to continue raising their corporate value going forward.
But just really quickly, because obviously the top companies are going to be fine no matter what happens, because they've been performing exceptionally well. And there's all of these governance changes and everything else in order to really, right-size them and improve them. But my question is, if we have a situation where already we're starting to see inflation decelerate, already we're starting to see that the Japanese economy kind of sort of is needing this easy monetary policy. If we were to see such a rapid shift in the cost of capital coming through over the course of a year, and it could be even more so, who knows? What does that mean for the rest of the economy, though? Because, the top 50 companies might be fine, even the top 225, but for everything else, and then what that does to just the broader economy in your mind?
I think this is a situation that will likely be the case for not just Japan, but for the rest of the world. I mean, you have to take a look at Japanese equities vis-a-vis the rest of the world. And I think a lot of people seem to forget that actually a lot of these Japanese companies are sitting on substantial amounts of net cash, which in an environment where we are going to be seeing higher interest rates will make Japanese equities look much more attractive than the rest of the world that will have to contend with rising borrowing costs. Now, that said, I think what is even going to be more important is exactly what you mentioned earlier about the changed macroeconomic environment, which we think will create winners and losers. And what do I mean by that is we do think that there are going to be companies that will continue to be able to pass on a rising input costs, including labor. But on the flip side, we also think that there are going to be losers who won't be able to do that. So active stock picking in this market, especially in the small to mid-sized market where there are going to be clear winners and losers emerging, is going to be really interesting. And that's where we come in.